Welcome back to the Dividend Diplomats YouTube channel, guys. You've got Bert and Lanny, your favorite dividend investors, the diplomats here on the channel, bringing you 5 dividend stocks as we head into April 2023. 5 stocks that are on my radar that are all positions I currently own and hold in my portfolio. And is it time to buy these stocks right now?
Before we find out, subscribe to our channel, give us a thumbs up. We're loving this. We're loving producing more content now that we've upped it to 4 videos a week. We're excited. We're pumped up. We can't wait to see these 5 stocks that are on Lanny's watch list. And I got to say one thing, Lanny. I love that you own every single one of these companies. I know I just talked about in our last video how I'm buying AMT, but I'm cleaning up other positions that are small. It's nice to have less positions to monitor. So I'm pumped up that you're focused on building what's within your portfolio already, and that you're going to be able to just grow from within it. You're not going to have to monitor some new stock as a result.
Exactly. But I own all these 5, and I'm not talking about selling stocks myself today. We're going to get into it. We're going to go through these fairly quick. Again, it's a Saturday video. We want to make sure you guys got your coffee, your beer, your water, your tea, making sure you guys are all staying hydrated. Bert's got his Miller Lite in a can right there, sipping on the nice fresh Pilsner taste. I've got my water with the lemon because I have been under the weather for about 5 days.
Yeah.
But we've got 5 stocks. Yields are going to be all over the place from 1.29% to 4.92%. All of these stocks are down this year. They're all down the last 52 weeks. The smallest company is 1.4 billion. The biggest company is about 475 billion. I'm sure you can guess who that is. But Bert, what's your take?
I think this is going to be great. They're all great companies. I own the majority of them as well. I own 4 of the 5 myself. There's one that I'm missing. But before we talk that, let's talk about how we're going to evaluate these stocks. We're going to run them through the Dividend Diplomat Dividend Stock Screener, 3 metrics and a bonus metric. PE ratio less than the S&P 500, payout ratio less than 60%, history of increasing dividends, and that dividend yield. So we're going to talk about the metrics in there. The PE ratio of the S&P 500 has been about 20 to 21x, everybody. So keep that in mind as we're going through the valuation. But I'm pumped up, Lanny. You want to kick it off with that first stock here?
Guys, we're going to dive into the health insurance industry. We're talking about Elevance Health, formerly Anthem. Ticker symbol is ELV. Stock price as of the close of March 28th is $458.53. Yes, that sounds like a whopper of a stock price. But guys, they're down 8.7% this year. They're a beast of a company, 110 billion in market cap. For why do you think this is on my watch list? Take a run through the dividend stock.
Yeah, it's funny. Every time we feature this stock on here, I feel like the share price is down another $10 to $20 per share. Let's run through it. Their PE ratio at their current price of $458 is $13.98 when you consider forward earnings. The payout ratio is insanely low, but their $5.92 dividend, their payout ratio is only 18%, which is insane. And I mean, as a result, you'd expect them to juice up the dividend, and that's what they do. Their 5-year dividend growth rate's 11.62%, and they've increased that dividend for 11 plus years. The yield is 1.29%, so just a hair below the S&P 500. But again, they make up for that with that double-digit dividend growth rate.
Exactly, guys. Again, a below 14 PE, below 18 payout ratio, double-digit banger. And their last increase was huge. I think they went from $1.28 to $1.48. So you guys can do the math there. Great dividend growth rate, great dividend growth streaks. That yield on cost. Again, I own a handful of shares, not a lot, a few shares. But I would like to continue to build this position because of that growth. It's really going to push that income in the later years of probably when I'm retired, guys, when I'm financially free. Let's go.
Yeah.
But guys, let's dive into that number 2 stock. Bert, since I know you don't own ELV, but I know you own this next one.
Pfizer, ticker symbol PFE. And their stock price has fallen to below a little benchmark that Lanny and I typically use when we're considering Pfizer these days. Their stock price is $39.99 at the time we're recording this video. So they're below 40, but they've hovered in that low 40 range for, I'd say, the majority of 2023 here. So let's run them through the metrics here. Let's see what they're talking about. With that price, their PE ratio is 11.87. Their annual dividend to $1.64. That gives you a payout ratio of 48.66% when you consider forward earnings. That's perfect. That is right in our perfect 40 to 60% payout ratio range. The dividend growth has been a little bit lagging. Their 5-year dividend growth rate's 4.38%, but they have increased that dividend for 12 plus years. They're almost halfway to officially becoming a dividend aristocrat. And Lanny, with that price falling, what is their dividend yield now?
Now it's well over 4% at 4.10%. They kind of piggyback off Bert's dividend growth rate comment. It's actually been fairly low, lower than their 5-year average the last few years, especially after they did the spinoff of Viatris, and getting through the COVID years. Even though COVID benefited them, but I think they didn't want to be too aggressive with what they were doing. It allowed them, though, to increase the dividend even after the spinoff, though, which was not supposed to happen. I think you remember that, Bert.
Oh yeah, the backdoor dividend increase for Pfizer, which was awesome. How could I forget that, Lanny?
Right. I mean, that was a really cool thing for the shareholders.
Yeah.
They're down 22% this year, 24% in the last 52 weeks, a 225 billion market cap company. Again, one of the biggest pharmaceuticals. This was one of, if not, this was the first individual stock I had ever owned. Bought them over 12, 13 years ago. So I've been a part of every dividend increase that they have, which is pretty wild
That's
to
wild
say.
to say, yeah. The nuts. I see what they're back on the watch list.
My little baby here. But again, I know they're going through a lot. I know there's a lot of poor guidance because of the impact from COVID and what they'll be able to do post-COVID. But they were here before it, and they're going to be here after it. So I'm not too afraid by that. The only concern I have is what will they do? Will they resume as a dividend income, passive income investor? Is my growth rate going to resume?
It's a fair question, but it might be worth nibbling on a share or two to take the risk and find out and grow your income that way. Let's move to number 3 here. This one's been giving some investors a headache over the last few years. The Dividend King, Johnson & Johnson, ticker symbol J&J. Their price is down to 151.82. They're stuck in these lawsuits. I finished my getting to 100 shares of J&J. Our cost basis is in the 160s. We still haven't added yet back to Johnson & Johnson, at least from my portfolio. But as you're going to see when we talk through the metrics here, I can easily see why they've popped up once again on your watch list, Lanny, especially around the 151 share price.
Yeah, they're almost at a 3% dividend yield, so give it another $1 and they're there. But yeah, their PE ratio right now is 14.45, fairly undervalued for J&J because they're usually in that 16 to 18, as Bert and I both know. Their payout ratio is extremely safe. It's perfect at 43%. Their growth rate's on average 6%. Again, good old reliable, as we call this dividend king of Johnson & Johnson. Not 10, not 20, not 30, not 40, not 50, but 60 plus years of growing dividends. So they are one of the creams of the crop, down 15%, Bert, 475 billion by market cap.
What's insane. I mean, again, they have the lawsuits coming up. They have some of the headaches coming from there. They also have their upcoming spinoff at the end of 2023, where they're taking a page out of Pfizer's book and spinning off their consumer staples. So there are some shakeups coming for Johnson & Johnson. We'll see how it's going to play out. But this Johnson & Johnson 3% yield is all I need to hear. It's insane that they're back to that yield level.
Yep. So let us know in the comments too if you guys are looking at Johnson & Johnson, the king right now. If you haven't, like this video. Come on, guys, let's go. Bert, let's get on the dividend stock number 4.
Yeah,
now,
this is my favorite sector right now.
Yeah, you've been busy in the regional banking sector, the big banking sector, the small banking sector. Well, I'm taking a page out of your book. I did buy, I think, a couple of shares in the last few weeks of Provident Financial Services. Ticker symbol is PFS. A little bank up here in the upper Midwest. $19.50 share price, under 2 billion market cap company. Bert, what's this bank looking like from a metric standpoint?
A lot of great value out there in the banking, especially the value is coming down. As you're going to see, they're down 9% year to date, 18% over the last 52 weeks. And with that, their price is now at 19.50. Their PE ratio is at 7.89 when you consider forward earnings. What's crazy though, what's nice about Provident, when you look at that payout ratio, their annual dividend's 96 cents. Their payout ratio is only 38%, 38.87% to be exact. So that's what you want to see for a bank in these times right now. And dividend growth, they have it on 5-year dividend growth rate because they've only grown their dividend for 2 years. So it's a little NA there on the dividend growth, but
They kind of do it weird where it's like 1 or 2 cents, maybe every like 5 or 6 quarter. Like they do it on a very weird schedule.
yeah, banking sector's been a little off though with a lot of the COVID mayhem, what's going on right now. Some of the regulations put in place after the financial crisis. You expect the banks to have higher yields, slightly lower growth, but some banks have been catching up. Neither, sorry. What you see here though is it comes through in the yield. Their yield is 4.92%. So very healthy for a bank right now.
Very healthy. Not the 6 to 7% bangers that Bert was throwing out there.
But again, payout ratio is only 38% for Provident. So you feel good about their dividend where it's at, and you just give up 1% and you're still yielding 4.92%.
Yeah. Again, little bank. Let us know all the little bank stocks you guys own out there.
It's an easy one for you to pick too. It's only $19.50 per share price. So it's easy for you to just throw $100, get 5 shares of this bank.
Now let's get into dividend stock number 5, guys. We're chugga choo choo. We're bringing back Norfolk Southern. Yes, I own them. Bert owns them. It's been about a week or 2 since I've heard of a derailment, which is positive.
Yeah, something else
there's-
kind of took a hold of the news cycle. Lanny. Norfolk's PR team's just like, thank you, Silicon Valley Bank. We appreciate you getting us out of the headlines right now.
Yeah, here's my beer.
Yeah.
So
No, that's terrible. Sorry, it's a terrible thing.
$204.59. They actually did briefly dip below $200. Obviously, I'm interested at. I think I'm with Bert at or under $200. Very interested in them just because historically they have a strong growth rate, a good moat. There's only so much railroad. It still is a very high usage from transportation of goods and services, coast to coast.
Right.
PE ratios below 15, payout ratios below 40%. They've been increasing the dividend for over 6+ years. Bert, what else do you think about Norfolk Southern?
Yield at 2.64%. They're obviously down year to date, 17%. Again, I always said Norfolk around $200, and I can't believe that it's right there right now. It's just kind of fallen off my radar because I've found so many other values out there of other stocks where my attention's gone from Norfolk to a lot of the banks and AMT and a lot of the other stocks I'm investing in. But I easily see why it's on this watch list.
Yeah. I think because of that, that's why I'm like, well, I'm not now eager to jump in on NSC because of other opportunities that could be out there, such as Johnson & Johnson, such as what was happening in the banking industry, as well as just ETFs overall, like you buying SCHD, BYM's been a little bit lower. So it's hard to trade off the risk to reward.
Right. But again, at this price, it's if you're finding 5 stocks for April, one that you want to add to your portfolio, easily see why they can slide into that 5th spot now, especially with a 2.64% yield.
So guys, let us know what you think about these 5 stocks. What stocks are you buying in April 2023? Are you still buying banking stocks during the banking crisis or the banking fiasco that we are still in? Let us know in the comments below.
If you haven't already, subscribe to the channel. Give this video a nice old thumbs up. Lanny, is there anything else you want to say to everyone before they leave?
All right, I'll take it this time. You're either with us or you're against us. That was Bert the Hurt and Lanny from the DD, over and out.